Hey everyone, I'm Charting Man Dan with the Chart Guys, trader and technical analyst. A fairly boring day in the market with low volume, so I'm going to take this opportunity to talk a lot about correlations, try and show you what I'm seeing. And I feel a little bit like Charlie from Always Sunny in the mailroom talking about Pepe, connecting the dots on the whiteboard, but I'll try and make it coherent. All right, so first we got the S&P 500 grinding up the 4-hour EMA 12 still, and we got right up to the all-time high on SPY, didn't get a new one. We have the NASDAQ breaking to the highest level in a few months, not a ton of follow-through. Let's talk about correlations a little bit. I made a video about this, a short one, a few weeks ago. Nobody cared about it, least amount of views in a very long time. I understand it because this concept is definitely more geared towards full-time traders. But I'm honestly baffled. It's such a clear pattern, 80 to 90% of every day, and it gives such good information that I'm baffled that nobody's talking about it. And I know there's high-level trading firms that are all over this and they're just not posting on Twitter, but I'm still baffled. I don't know why everybody's not talking about it. So what I am talking about is the inverse relationship, mostly between QQQ and XLF. But if you want to zoom out a little bit more, it's the inverse relationship between QQQ and SMH and XLF and XLV. And again, these are the most important sectors in the broader market and the relationship that they have. Again, this all derives from, the clear bear signal that I keep talking about when all major sectors hit the lows of the day together, QQQ, XLF, XLV. And that gives us a lot of information because it does not happen often. And that's when we say, okay, I'm paying attention to the bears because they're proving something. And if here's just today, for example, 5-minute time frame. That's the daily. Bear with me. So 5-minute time frame, QQQ bulls show up on the morning. They have a solid move up. They come down and test the low of the day, 5-minute high or low, and then straight up on the morning. At that same point in time, XLV has a big drop, little 5-minute lower high, same 5-minute candle this pullback is, and then a straight drop. Tick for tick inverse through the morning. And why does that matter? Number one, that tells me when I'm analyzing the broader market and getting a gauge of the broader market, if one of our major sectors is going up to match one of our major sectors going down, I know that's bull control. Bulls have been using this correlation, this inverse correlation, as a control mechanism for the majority of 2024. And it's definitely a 2024 thing. I have not noticed this at any point in my other decade plus of staring at these sectors trading. So it's newer, and that doesn't mean it didn't happen back then. I just didn't notice it back then. But it's such a clear inverse relationship. So what that means, how do I utilize this? Well, I don't get overly bearish if the inverse relationship is intact. Again, that's 80 to 90% of every morning this happens. Number two, it glaringly stands out when the norm is not happening. If XLF and QQQ are going up together or dropping together, I get a light in my brain that flashes and says, this is not the norm, this is unusual, and pay attention. We likely have more volatility today. And so just with this current setup in the market right now, we have very low volume and volatility because of this inverse relationship. It's keeping SPY very contained. I mean, SPY had a $1.67 range for the majority of today. It's nothing. Nothing is going on in the market the last 5 days. And what I do know is, number one, volatility is coming, right? Because things are getting slow. The last time I said that was back here where I said, the volume is so low. I forget which day it was, somewhere right around here. Get ready for market volatility. This volume is extremely low. These ranges are extremely low. And then, of course, we had that weekly sucker punch. And so I'm saying it again, just like NVDA was sideways tight. The volume and the range of these candles tell us volatility is coming to the broader market. And we will know, here it is, when QQQ and XLF are going in the same direction. Whether it's up or down, that remains to be seen, but they will be going in the same direction when we're going to see a spike in volume and when we're going to see volatility pick up a bit. So I'm watching for it every morning. Every morning I'm just staring at QQQ and XLF, and I'm going to attach the video that I talked about this in a little bit more detail. It's a quick 5-minute video in the comments of this video. to give you some more insight of how I use that every trading morning. But it's just a great overall gauge of the broader market, and essentially tells me, is it going to be a uneventful day, or is this a pay attention volatility day? Semiconductors continuing the move up. After hours MU bull reaction to earnings. You can see SMH is responding well. MU 111 is a very key resistance. We're approaching that level, still a bit of a ways away, but bullish reaction for MU. And so that's a good thing for semiconductor bulls. It's not having a huge impact on QQQ or SPY here after hours, but bulls will take it. Certainly better than a bear reaction. Again, I was keeping an eye. Is SMH going to be a 4-hour rising wedge to set a weekly lower high? And need to see how tomorrow goes. By the close today, it was still in play. So still possible to be in play. But again, bulls just trying to creep up to the weekly lower high, which is now 2.5% from where we stand after hours. And bulls would love to break that resistance because, again, right now, SMH is the one that's holding back. Let's talk about correlations again. So today, Meta had an event, and talking about their glasses or whatever they got going on. And we had an initial bullish reaction to new all-time highs. We gave it back. And with their new product or whatever, again, I'm not paying attention at the moment to the news headlines, but it was a competition for Apple. And so Apple and Meta developed this inverse relationship. And we have inter-sector rotation between XLF and QQQ, and we have intra-sector rotation within QQQ between some of the larger names. Most notably, we have Meta had gone straight up. It pulled back for a couple of days while NVDA got its bull move up. So big tech and semiconductors have been doing a little bit of intra-sector rotation. And then you got this on Meta. So here's, the bull move starts on Meta at 125. And here's your bear move on Apple at 125. Straight up on Meta, straight down on Apple. Meta tops out at the 210 candle. Apple bottoms at the 215 candle. Big bounce, big drop. Inverse to each other. So that's now a relationship that we can watch for the rest of the week. That relationship will fade eventually, but for now, we're keeping an eye on how long are Meta and Apple going to stay inverse to each other because of this new product and competition. And so again, that's another thing that keeps the market going sideways. It's just tug of war. You got two sides pulling, and so we're not moving anywhere. But if you have one of those sides come around and now you've got everybody pulling one side, that's when you get the significant volatility. Tesla, nice strong close. Good bit of profit taking yesterday, so this is a good save for the Tesla bulls to be right up there. 257.19 is still a little double top, but knocking on the door of that resistance. If bulls are able to get over it, we're looking, this is why we're seeing resistance there. Look at this zone here. On the way down, we topped out in the 257s and 258s 3 days in a row there. And so we're currently stalling just under that. But daily stair step still intact for the Tesla bulls. And that's now 7 days in a row. So one of the bulls that stood out today, along with NVDA. NVDA kept its move from yesterday going. That's a good sign for bulls. Hourly uptrend will be our guide. Little bull reaction after hours, testing the high of the day now. Healthcare was a big bear today, so testing this low, 152.28. If that level breaks, the weekly bull flag decreases in probabilities, and we will then have, we're not shaping up monthly consolidation yet, but we'll then be watching previous resistance to try and hold as support here. But clearly, XLV, one of the lead bear sectors over the last 7 days. And again, over the last 7 days, you've got names like Meta going straight up. XLF pulling back further, so no longer that 4-hour cup and handle possibility. Still looking for the daily high or low, but no sign of it. Let's talk more about correlations. So there's a chain reaction to correlations. So if I know XLF and QQQ are inverse, and semiconductors are pulling up QQQ, and XLF is dropping down, then I know IWM is going to struggle. Why? Because IWM's largest sector holdings is the financial sector. And you can see XLF red the last 3 days. IWM read a little bit more than that. Well, last 4 days. No, there was a green day in there, but you get the idea. We're pulling back in a very similar manner. We went up together and we're pulling back together. And so there are times IWM can disregard XLF, but again, the most common relationship is IWM is going to be doing what XLF is doing, usually to a bit larger magnitude because it's a bit more volatile. And so IWM, that hourly potential falling wedge, is now off the table as bears followed through today. And so, still looking for a daily high or low here, but we do have space now for a daily lower high. So I'm keeping an eye out to grab, as soon as if I see a morning where QQQ and XLF are dropping together, I'm instantly jumping back in a sizable hedge because I'm now back to mostly long leaning, vast majority. And again, that's my signal. This is something different. And if they're both dropping, I'm going to be paying attention. We may not get followed through, but I at least want to have a move to try and protect in that scenario. MSOS, never a good sign to go right over a key resistance and then give it right back. But if you go straight up 10%, I posted in a tweet, I would prefer that we fail the 710 to 714 resistance zone, set an hourly high or low, and then break. Instead, we just went straight up 10%, got over that resistance, but didn't establish any support on the way up and giving too much of that back. And just draw these lines. If we're not closing over 724 to 726, where we topped out 1, 2, 3, 4, 5, 6, 7, pretty much 8 days not in a row, 8 days in a month plus of trading. If we can't close over that level, the bulls aren't going anywhere. And TCNNF still closing, new all-time highs of relative strength today. So still holding on much better. But again, bulls really want MSOS to turn 724 to 726 into support. Dollar, solid bounce, keeping that potential falling wedge alive. So again, we're watching something like this. And with that, pullback day in the metals, gold, new all-time high, but potential reversal doji. We'll look for daily consolidation. We'll watch back burner responses to hourly oversold or 4-hour oversold. Silver after a huge day yesterday, giving some back today. No major red flags there. Bulls ideally want to hold the back test of resistance now, support. It's just a question of how significant a bounce is the dollar going to see here if this is indeed a falling wedge. Oil, we were watching this 4-hour channel from yesterday's video. Again, bull break on the daily, but we know a weekly lower high is the most likely scenario, so we put on our bear glasses and ensure that we don't get caught off guard. And here we've got a clear bear break of this channel. That's step number 1 for a weekly lower high to be set as we're rejecting from weekly EMA 12. At this point, the bears would want to eventually confirm a daily downtrend, but that's the first meaningful shift on this daily bounce. And UNG still holding on just sideways the last few days, not much going on. 4-hour, little equilibrium shaping up. If it breaks bear, we zoom out and scout a daily high or low. And if it breaks bull, we're looking at 1621 as the next resistance level. So, for many of you that are not full-time, that are not professional traders, the correlation that I just went into isn't going to matter a ton. But it's worth keeping an eye on, and it's worth paying attention to, in my opinion. Because again, it's just, for me, it's just such a good gauge for the market overall. And there are times where I make trades based off of it. For example, today, QQQ had that 5-minute stair step. It broke it while XLF was still at the low of the day, so I grabbed along. We then got a bounce 10 minutes later, a very weak bounce, but it was enough for me to sell partial, stick a break-even stop under the low. If we get any meaningful bounce, you know I love getting risk-free. Give me a worst case scenario, I lose $0. Best case scenario, a significant shift takes place. I ended up stopping out break even, so didn't amount to anything, but that inverse correlation allowed me to position in a break even spot to give it an attempt. So again, it's just, I'm almost like, look at this, guys. Like, how is nobody talking about this? It's just such a... All right, I'm done. Do good things. Hope you're well. No end of the video here. We got a big flood coming right in time. We have a Chart Guys meetup in town, and it's a potential 1 in 20-year flooding storm. So I've been cleaning gutters and digging out creek culverts all day, but it might get hairy over the next 48 hours. There's the potential that we get a foot of rain in a 2-day window here. So hoping that that's not the case. There's tornado warnings in the mountains. It's an odd thing from this hurricane. And it's about to start right about now.